Hey everybody, it's Seth and Paul for Everything Money Channel. Welcome to the show. As always, we're welcoming our new subscribers. Paul, we got a ton of them the last couple of days. We're very excited. I know you and I text each other on a minute-by-minute basis. We check these likes and subscribers like little children, and I love it. Don't you?
Oh, are you kidding? Of course I do. Ironically, though, you only respond to the text that I send you subscriber counts. When I send you pictures of myself, you never respond to those texts. I don't know why that is.
And if you're looking to send pics, you can do that through our Patreon. Send Paul your gorgeous pics. He's available on our Patreon. We'll go over that later in the show. But why are we here, Paul? I mean, of course, you know, I said we love talking about hot topics in the news. And again, Bitcoin decided to get more interesting. People didn't care about this for the last few years. The numbers are all over the place, Paul. I called you, was it either winter 2017, 2018, and said, Paul, listen, you're missing out now. You got to get in on this Bitcoin. It's incredible. It's the new thing. It's the new wave. And sure enough, it went up to somewhere, was it 2 Christmases ago? It went up to about $20,000. And people were buying in like crazy. People had no idea what the heck they were doing. You know, you always told me, what's that saying? You told me if you start hearing stock tips from people at a party, you know it's time to get out. Go over that. Talk about Bitcoin.
When it was hitting close to 20,000 a few years ago, the kids at Walsh who I teach were telling me how I'm missing out. The waitress at Corky and Lenny's and Bob Evans were telling me how they bought Bitcoin. And then it proceeded to plummet to $3,000. There's a saying by Peter Lynch. He has a cocktail party theory. If he goes to a cocktail party and tells people what he does, and Peter Lynch is a famous investor in stocks, he tells people what he does. If people are like, oh, that's kind of pretty neat, he knows the market's probably reasonably priced. If people are telling him what to buy, it means the market's overpriced. If people feel bad for him for what he does, it means it's a time to buy because the market's underpriced. That's kind of the cocktail theory. And I remember having lunch with my friend Michael Moskal, and we were laughing about Bitcoin. And literally, our waitress at Corky and Lenny's she heard her say Bitcoin. She interrupted. She goes, "Oh, I just bought some Bitcoin for my portfolio." And we were just like, "There you go." And it's not meant to knock waitresses, but you know, when I have high school kids telling me, "Paul, you don't get it. It's blockchain," and I say, "But blockchain's around whether Bitcoin's around or not. It's not." That doesn't make Bitcoin better. But either way, that's the whole theory behind it.
Well, since all this rage happened a couple of years ago, how many coins came in and came out of existence? A lot of people lost a lot of money. And so give us your overall thoughts on Bitcoin, why you're emphatically against the idea of putting your money into some random coin like that.
I'm against it if you're using it as an investment tool or a hedging tool or a protection tool. When the world comes, the people who are trying to justify it say that it has to do with, oh, the world's going to come to an end, therefore Bitcoin. Let me tell you something, people. If the world comes to an end, the landowners, the gun owners, and the food crops will be the people who do very well. It's not going to matter about some digital currency that's not going to be accepted anywhere. I mean, that's just it's a contradictory argument. The world comes to an end, so let's use something that's technologically based. It's like, how is that going to be? I mean, I just don't understand how it's going to work. When times are scary, people go to the safest assets. And the safest asset tends to be government debt and U.S. cash because that's backed by something. You know, people say to me, well, Paul, Bitcoin's no different than currency. Yeah, it is. The strength of the U.S. government backs every dollar out there. Now, is there an argument to be made that they're devaluing the dollar? Absolutely. They're printing tons of money. Great. But at the end of the day, tell me who's going to bet against the U.S. government at this point in time. If you're using it as a speculative play, as a trading tool, hey, more power to you. But if you're trying to fundamentally defend it, I just think you don't understand economics. And that's fine. And you might sit there and say, well, Paul, look at you. You're wrong. Bitcoin's at 23,000. Well, did it make me right? Then when Bitcoin went to 3 from 19, according to your same argument, you should have said, oh my God, we were wrong. But you didn't say you were wrong at 3,000. You said it'll come back. So that's the hard part.
Paul, your teachings are based on fundamentals of companies.
Yes.
So if you're new to the show, we analyze the health of companies based on a lot of math, a lot of numbers.
And real estate and all investments based on fundamentals.
So what are the fundamentals?
Bitcoin has no fundamentals. What's behind Bitcoin? A computer? It's based. I'd rather have you buying baseball cards that are very, very rare. To me, that is something that even if the economy crashes, there'll still be a value for that at some point. Because somebody will sit there and say, okay, I'll still pay for that Mike Trout rookie card that's signed and it's worth $4 million. Maybe it's worth $500,000, but it's worth something. Bitcoin fluctuates in price astronomically. Can we show the chart yet?
Sure, Paul, go ahead.
So this is the chart of Bitcoin. December of 17. This is when all the kids in my classes were telling me, oh, this is the best thing ever. It's the
That's
best thing
18,
ever.
Paul. So I was probably calling you in 17.
No. It's 17. Look at this. December of 17.
Oh, look down on the graph. It's really weird.
No, that's the beginning of 18.
Oh,
that's the
December. Got it. Yeah. So I think
when you go from left to right, that means the years are progressing. So that's how it works. This is the start of 17, not the end of 17.
Thank you for that. Yeah, I appreciate that.
All right, sounds good.
So I bought my ball, Paul. I got in on this malarkey. I bought around 3 coins at around $3,000. So I probably had this conversation with you around the 2017 time, right?
Yes, correct. You made good money on it, and it fell to like whatever. I don't remember exactly what your basis was, but you made good money on it. But look at it; it fell all the way to 3,000. This doesn't even show how low it got in intraday. It got $3,000 or 3,100, and then it got to 5,000 here. And okay, it's skyrocketing. But guess what, guys? This is a parabolic move. What's this? A parabolic move. What happens in parabolic moves? I will show you every investment in history, and I don't remember a single one where it did parabolic and then flattened out, or parabolic and then just grew normal. It doesn't happen that way. This is a parabolic move. There's going to be a parabolic fall. The question is how, when, I don't know. This was a parabolic move when it was at 10,000. It still went to 19.5. So you never know.
Paul, talk about the greater fool theory. You've been talking about this on our show for the past few weeks, couple months now, and I'm really drawn to it because I think a lot of people got into Bitcoin thinking it's going up. I'm going to make easy, cheap, free money with very little work behind it. And in this theory that you describe, obviously didn't come up with.
There's no such thing as a free lunch. We were talking about it earlier. The greater fool theory is basically when you buy something and say it's an investment, but you have no way of getting money except for somebody else paying you more money for it, and nothing fundamentally happens. Or even that, you're just hoping somebody pays more money for you because that's the way it's going. That's called the greater fool theory. A greater fool will buy it from me at a higher price. That still occurs in stocks where stocks can give you money, but the valuation metric of that is saying, well, the company's making money, but somebody will pay me even more money for the stock, even though it's making the same amount of money. So it's this greater fool theory of saying, I hope but here's the deal though, Seth. Here's why it's hard to explain that. Somebody who buys Bitcoin doesn't think they're the fool. They think I'm the fool. So their eyes are like, no, I'm going to make more money from this because somebody else, it will go up in price. Okay. But when it was at 3,000, I didn't see any articles calling for Bitcoin at 250,000. Now I see it all over the place.
Yeah. Bitcoin. I mean, you're right, Paul. I was looking up past articles from 2018 because I remember at like cocktail parties, a friend of mine said, listen, this coin's either going to be $0 or $1 million. And I'm betting on $1 million. And I'm thinking to myself, is that really where I want to put my money on something that could go to zero where there's so many other options? And, it's like, I guess the fundamentals behind it, Paul, like people are so diligent about like.
There are no fundamentals. I don't want to hear it. I do not want to hear it.
Well, I guess I'm just surprised that people, like I said, are so diligent. They pay their mortgage, they pay their taxes, they donate to their church, they have a budget, they have a retirement planning, and then all of a sudden, why did I buy into this, Paul? What does it all come down to? Why I was one of these dummies that bought into it?
You bought it because it was exciting to see it skyrocket.
Mm-hmm.
That's why you bought it, and that's fine. But look at this. Will Bitcoin hit 500,000? I didn't see these articles when it was at 3,000. Now, somebody might sit there and say, well, they weren't out. The people weren't paying attention. Exactly. This thing fluctuates based on people just spending more and more and more, and eventually happens like, oh, well, it's going up a little bit. It's going up a little bit. Oh, maybe I should get back in. Oh, my God, this is incredible. Oh, wait a second. Oh, it's rebounding. Oh, it crashed. Oh, it's rebounding. That's what happens all the time in every single unreasonable bubble. And listen, more power to you if you want to trade it, but please don't look at me and say fundamentally it's a good investment. Like that's just insulting to me, and it makes you look not very bright because there is no fundamental analysis behind this.
What can people do instead to follow fundamentals and be disciplined with their investing?
You're going to do better over the long haul. It's the whole idea of if you're always swinging for the fences, you're going to strike out a lot. Yeah, maybe you hit a home run here or there, but you're going to strike. And somebody will say like, well, Babe Ruth had the most home runs ever by swinging. I had the most strikeouts ever. Great. That's one person you're talking about in the history of like baseball, right? Go save in your ETFs. Go save every single month. Dollar cost average. Buy companies with fundamentals because cash is always king. It wins in the long run. It's no secret that the best investors of all time all believe this. The best investor of all time are always the value investors. And they're the guys who try to buy $1 for 50 cents. They want to hit a bunch of doubles, maybe a few triples here and there, but they want singles and doubles all day long that they know are going to happen. That's what they want. And they do the best because of it.
Yeah, Paul, this is really enlightening. You know, folks, obviously Paul's very talented in what he does in terms of making money, investing money, and I'm just a normal guy, and I love learning from him because he just sort of told me that you don't need this. You don't need to try and hit it with a Bitcoin to become a cheap, easy millionaire. You just need to do the simple B2Y steps, Paul. What are the B2Y steps? Tell people.
So everybody's worried about, I always tell people you got to get started, and everybody starts worrying immediately about where am I going to go? The A is the start. Z is where they want to go. They forget that it takes B to Y. How do you eat an elephant? One bite at a time. People keep forgetting that there's 1,000 steps between today and retirement. The first one to get those steps done will be the first one retired. That's it. Everything you've done in life, the first ones to make the steps and get the steps done, gets it done faster. You might hide behind, well, I'm a very calculated person. No, you're just lazy. Nope, you're just slow. Don't try to mask your issues as to why you're not accomplishing things behind, self, patting on the back kind of statements. Just go out there, see how many people you know that are wealthy and how many of them hit it. In fact, the ones who hit it quickly with a lottery tend to be broke. So that's the thing. Easy come, easy go. You might have made your money here, but it could be the biggest disaster that ever happens. You know why? Because you'll think you'll always do it, and then you're going to lose your butt on every other investment that didn't do that. For every investment like this that happened, how many other cryptocurrencies have done nothing? For every .com that made it now, how many of them either failed miserably or fell by 95%? Even the ones that made it from 2000 and now fell 95% or 90% at some point because of overvaluation. So just slow and steady wins the race, especially in investing. The longer time frame you have, the better. Look at your kids, Seth, 7 and 10 years old, and all they care about is let me put my money towards savings and investing, because $1,500 today will become $115 today becomes $30,000 when they retire. That's just it.
Yeah, it's amazing, Paul. Guys, if you love what you're hearing, you can join our Patreon, patreon.com/everythingmoney. Paul, we hit over 70 members in our Patreon. It's incredible. There are 3 different tiers. The top tier, you get to pick Paul's brain on a daily basis. Paul talks about his portfolio, what he's buying, calls, puts, options. And it's a wonderful community of discussion with like-minded people. We have a bunch of disciplined people, Paul, that are looking to save for retirement, become millionaires, and they're certainly not doing it by.
Do we have any millionaires in the group now?
I would think we have an older chap, Tom. He sounds very knowledgeable.
He did disclose that he has significant assets. I do know but other than that, like anybody young that's a millionaire besides you?
We definitely have some people who are. We definitely have some people who are on their track. Some people in their early 20s who are saving. We just have a lot of incredible people on our Patreon. If you're interested, you can certainly join. What you also get on our Patreon is Paul and I having these discussions, sit down fireside chats that are uncensored, sort of. When we cover everything, real estate, investing. We ask your particular questions. They're Patreon only chats we do once a month.
We use bad language.
And you're going to get access to Paul and myself on a daily basis. So Paul, thanks for your insight. I always, again, we were at 2 different levels of this a couple years ago when I was trying to convince you how amazing Bitcoin was. And of course, I had no damn clue what I was talking about. And I was trying to tell someone with 20 years of business and investing experience that, again, you were wrong and missing out. Go ahead.
Every person who smokes, do they get cancer?
No, I don't think so. No, of course not.
Right. They don't get cancer. Does that mean you should go smoke, hoping to be the one that doesn't get the cancer? It's still the same thing with Bitcoin. Could Bitcoin go to 100,000? Absolutely. But if your thought process is Bitcoin going to 100,000 every single time, then you'll lose your butt on other investments that don't do well. And if you don't get if you don't get cancer from smoking, but you think you're not going to get cancer, you might go eat poorly and you'll get cancer from something else. That is my whole point about it.
Mm-hmm. So it's really the discipline approach. Yeah, discipline approach.
My job is to play the numbers. You might miss out on Bitcoin, but trust me when I say, if your thought process is always hitting a home run, you will have so many more strikeouts than home runs. Because guess what? Even though Babe Ruth struck out a ton, he was still an effing good baseball player. Mm-hmm. And Warren Buffett's had his strikeouts, but he's still an effing good investor. And Peter Lynch has had his strikeouts, but he's still a phenomenal investor. You are not a phenomenal investor. If you believe Bitcoin is going to the moon for no other reason than the charts or because it's blockchain or because it's the future, then you are not a good investor. Just put your money into ETFs, save, you will do great. Join our Patreon, you'll become a great investor.
Thanks for watching, guys. Follow along. Make sure you smash that like and subscribe. We love you. Appreciate it. Thanks, Paul.
Thank you.